want to say the support on the channel recently has been amazing. It's been like back to back to back videos with over 1,000 views. And I want to say, guys, thank you so much for all the support. I see all the comments, I see the likes, I notice the people who return to the channel and continue to support. It's been really great. Also, I have seen a lot of people who are just finding my videos. The conversion, I guess, on new subscribers from like new viewers has been awesome. I just want to say I'm really happy with this community and I'm really happy with everything, guys. With that being said, we've got a very special video today. We are investing $1,000 and it might seem kind of a little clickbaity, I guess, but we're going to ask ourselves the question, can $1,000 invested in dividend stocks change your life, guys? We're going to go through a couple different scenarios and we're going to use, a real investment I'm going to make today live in this video. See what kind of income it can generate today as well as down the line, guys. Like I said, thank you for all the support on the channel. It's been pretty surreal and we are going to keep going. There is one thing I do want to briefly talk about. I've been working a lot and it's been awesome because it's allowed me to invest a lot in the portfolio in terms of money. And also, I've had some good friendships and stuff come from work, so that's great. With that being said, it has left me in a point of not always being able to brainstorm the more conceptual type videos. And it's led me to, I feel, release a lot of the more documentation style videos on the channel, which is what I love to do. I love to share my journey and kind of teach through, how I see things, give feedback, learn from you guys. But I do think maybe I take, a 1 week break, skip a Monday, and rather than filming that week, focus on brainstorming some more conceptual type videos because, obviously I do want to have a good blend of both types of videos on this channel, whether it's the portfolio reviews or live investments or, the videos where I cover and talk about more concepts. Guys, your feedback does help a lot. So I just wanted to briefly touch on that. I might skip a Monday of dropping a video and then use that week just really to focus on, brainstorming video ideas for the future. I've got a lot kind of written down when I originally launched the channel. I had a lot of ideas brainstormed for different videos. I ended up, kind of running with some of them, doing a few of them multiple times, and then some of them I realized didn't really fit my channel vibe. But guys, what I'm trying to say is I'm going to keep going hard to make sure this channel has, fresh, entertaining, and, great content. That's my goal. Okay, guys, without further ado, we are going to share my screen and we are going to get into the investing. Okay, guys, the position we will be using for today's example, we are going to spend $1,000 on Hershey stock, ticker HSY. I'm sure if you've been with the channel, guys, you have heard kind of my bull thesis on Hershey. So I'm not going to dive too much into fundamentals on that today. However, we're going to take it more from the lens of what type of returns could we expect or, project from a $1,000 investment in a dividend stock. Guys, real briefly, the portfolio is currently generating $2,623 in estimated income. That's that monthly average of 218. You know, we talk more about this in the reviews, but figured I'd show it. Let's look in at the Hershey position, guys. It is currently my number 4 largest position at a market value of $7,690.80. Hershey is currently trading at $192 a share as of October 1st, the filming of this video, guys. My average price on Hershey is $186.59. Guys, that puts me at an open profit on this position of just under $231. And I have spoke on a lot recently wanting to take this one to, you know, move it from kind of these middle of the pack type positions. I'd say that's Microsoft, Pfizer, Starbucks, and Hershey, to moving it more towards these large portfolio positions, right now being Realty Income, Altria Group, and Apple. So with the $1,000 investment today, we should make some progress in that. Let's get into it, guys. We are going to purchase 5 shares of Hershey, and obviously 5 times 192.46 or a fill around those whereabouts is going to take us, you know, pretty close to that $1,000 kind of clickbait title I'm probably going to include in this video. So we will go ahead and market buy 5 shares of Hershey. There we go. I love that sound. I've heard that sound a lot. I've bought stocks for a long time, and I've always used Thinkorswim. So now we have 45 shares of Hershey, guys. That order was filled at, let me see, that order was filled at 192 and 44 cents and 0.2 of a cent, guys. Taking our average price, as we just talked about, it took it to 187.24. So I guess we are technically at a point where I am averaging up in this guy. I'm not really worried about that because I'm more kind of focused on building this position out under the $200 mark. And hopefully by the time I take this one to kind of a large position in the portfolio, we will see this awaited reversal in Hershey stock. That would kind of be an ideal world. I'd build out the position. We maybe see Hershey reverse towards all-time highs, and then I can shift my focus elsewhere. All right, guys, now let's get into kind of the dividend fundamentals with Hershey stock. So I'll go to the dividends tab, and actually what we're going to do is we're going to take, the current dividend metrics on Hershey, and we're going to kind of plug it into a few different scenarios to see, can this $1,000 investment change my life? So the current yield on Hershey is that 2.86%. Guys, just real quick to review, the way that's calculated is by taking that forward payout on an annual basis divided by the current trading price of Hershey, 192.4 roughly. And then, if we want to get technical, multiplying that by 100 gets us that 2.85% yield. It's pretty close. We're going to go with 2.86. Guys, we'll go ahead and plug that in to our trusty dividend calculator, 2.86% as the starting annual dividend yield. Guys, our starting principal is what? It's what did I say the fill was? It was 192.44 times the 5 shares, guys, $962.20. So we'll go 965. We're going to start with 0 contribution. I am going to turn off dividend reinvestments, okay? So literally no contribution, no net new capital, no reinvested dividends. Okay, guys, just for sake of this video and simplicity, we're going to assume we're paying these taxes out of pocket. Okay, so when I file taxes come tax season, I would like to not, dip into my investment account. I want to pay my taxes out of pocket. So we'll go ahead and go 0 there. I know that's not perfect, but, for the sake of the video, we're going to go ahead and do that. And then expected annual dividend amount increase percent per year, guys. We will go back, and in order to kind of estimate this, there's a few things we need to keep in mind. Okay, Hershey has only had their dividend growth streak for 14 years. Okay, in the grand scheme of things, this is not that long of a time compared to a company like, Altria, Johnson & Johnson, any of the dividend kings that have much longer track records. Obviously, we want Hershey to get there someday. But with that being said, earlier on in this phase is going to lead to oftentimes kind of a higher 5-year dividend growth rate. Hershey's looks pretty impressive right now at this 12.52%. But, rather than using that 5-year growth rate, I do want to be a little more conservative and just go with maybe just go with 10.5. We'll just go with 10%. All right, we'll make it easy. Annual share price appreciation. This is one that I really struggle with to conceptualize, just because of the way I like to think as an investor. And I'll use Hershey's chart real fast as an example, guys. So when I'm trying to, model, I guess, share price appreciation, kind of the way I think is I'm building out my positions when these stocks are in, undervalued territory. So I would expect then for when Hershey does kind of see this reversal to fair value, I would expect, a little more aggressive share price appreciation in kind of those first 1 to 3 years before, something else happens. Maybe there's another correction. To me, I don't really love to kind of key in a share price annual expectation. But, if I have to do it for modeling's sake, really the best thing you can do is just kind of use an 8 to 10%, slightly more conservative than the S&P. So we'll just go with an 8%. But, I hope you guys understand what I'm saying. I'm not really focused on if I buy Hershey now, I'll get 10% a year every year. Because, obviously we all know that is not how stocks work. I'm more focused on, locking in my entries, building out a respectable amount of dividend income from the position, and then hopefully watching it return to fair value in some sort of timely manner. We'll go 8%. Years invested, guys. I'm 23 right now, so I guess if we go 20 years invested, I'll be 43. And we will go ahead and calculate distribution frequency. I don't think this is going to matter without having dividend reinvestment turned on, but just to keep this a little more realistic, we'll go quarterly, and we'll go ahead and calculate. Okay, so in 20 years, my ending balance from Hershey is going to be $4,498, guys. Obviously, we all understand this is conceptual. This is not guaranteed, licensed financial advice. That is a total return of 366%. And obviously, that average annual return is 8%. All right, does that make sense? At this point in 20 years, so when I'm 43, if I want to start taking, I want to start taking dividend income from the portfolio, it's going to be $188 and change. And the total dividend payments over 20 years is going to be $1,580, guys. I would say looking at this is impressive. This is a great example of kind of simple return or simple interest, but this is not. This is by no means a life-changing amount of money. If we do want to reach kind of that life-changing standpoint, we're gonna have to look at a few things, and we're gonna have to, I guess, play with a few variables, guys. So let's go over. We'll start fresh on scenario 2. I've left 2 tabs open just so we can kind of compare and talk about this. And I do want you guys to know, whenever I film these videos, this is not something that I practice ahead of time. You know what I mean? So, this is the same. I'm kind of in the same shoes you guys are in right now of seeing, okay, how is the math going to work out exactly on this? What can be changed? So now we're looking at scenario 2. We've got that same starting principle of $965 annual contribution. Assuming I were to continue to buy Hershey annually, I don't know. Let's keep it at 0 for now, just so we're not changing multiple things at once, guys. That initial annual dividend yield, again, 2.86 right now, today. Kind of what's my initial bang for my buck. And we will keep the same numbers here. We'll go 10% on the dividend increase, and we will go 8% on share price appreciation. I do want to mention again, I do think these 2 categories we've keyed in here, the 10% dividend increase and the 8% share price appreciation, my gut tells me these are both conservative. I mean, Hershey has kind of shown, they're pretty dedicated to rewarding, long-term shareholders in the past 5 years, growing their dividend at over 12.5%. But, that does not guarantee they will continue to do so in the future. Again, with just trusting my gut, I do think Hershey will continue to aggressively grow that dividend, especially after cocoa prices kind of cool off and they can improve their profit margins again. But like I said, we're going to go conservatively 10%. 20 years invested again, and like I said, we're going to go with a dividend tax rate of 0%, guys. Distribution frequency, that's going to be quarterly here, and that will matter kind of on this scenario, okay? Because we will be investing dividends, reinvesting dividends. Does that make sense? And the reason why, this is just kind of a math thing, quarterly versus annually, the more compounding periods you have in a year, the quicker compound interest is kind of going to take effect, okay? Does that make sense? And that's just kind of like a finance 101 thing. Let's go ahead and calculate this and see what it turns out. Okay, so just to Just to clarify, between the two tabs, the only thing we've done here is turn on reinvested dividends. Let's go ahead and calculate. The ending balance, just by turning on reinvested dividends, guys, is going to be about 45% higher than the ending balance without. So the ending balance here after 20 years was $4,498. Now with reinvested dividends, we're hitting $8,463 in the ending balance for a total return of 777% compared to 366%. Okay, so can we focus on this and understand how, just having the discipline to not kind of scrape dividends out of your portfolio every month. Oh, I want to do this. I want to buy, a new hat, a new whatever, necklace, car, whatever. I'm not saying to be some, super cheap, frugal, save everything type of guy, but I'm just saying, a little discipline here on reinvesting dividends is going to go a long way, in the portfolio, guys. It's going to take our average annual return from that 8% now to 11.5%, which is higher than the S&P 500's, long-term average annual return. At this point, your annual dividend income is going to be $354.80 compared to $189 in the first scenario, guys. And your total dividend payments over the course of 20 years obviously is going to be a lot higher. One thing we've talked about, we had a whole video covering it, was kind of that yield on cost concept. Rather than dividend yield on price, this yield on cost is going to take, your annual forward dividends divided by your cost on those shares, your cost basis originally. As dividend investors, we need to be very yield on cost oriented, very forward thinking, guys. The yield on cost with reinvested dividends was almost double what it was without. Okay, so again, awesome scenario. We've got our $1,000 investment, not quite. In 20 years, it's going to have an annual dividend income of $355. Again, I would not say that's life-changing money. Just with a, with an example at this small of a scale. But we are going to do kind of one more scenario. I will keep the original scenarios pulled up. We are going to, real quickly, we're going to go through one more scenario. So our $965 investment for 5 shares of Hershey. This was a 2.86 annual starting yield. Is that what we went with? What do we got going on here? No thanks. Expected annual dividend increase, we're going to go with 10%. Same thing with the share price. We'll go with 8%. 20 years again. Oh my gosh, 24/7 automated profits in crypto. Holy cow. I wonder if they will take my social security number right now and then I'll be super rich. Okay, moving on. Again, we're going to go tax exempt. Just because we're assuming we're paying these out of pocket, we will go with the reinvested and we will go with the quarterly, guys. Now, our annual contribution. I don't know what I want to key in for this example, just because, I do want to stay on brand of kind of the smaller scale numbers. So I guess for our annual contribution, we could go with something like, 1/4 of the principal. We could go with $242. I think that's fair. So we're going to assume we start out with the 965, and we're going to assume we could contribute, 25% of that principal every year for the 20-year period, guys. I don't think this is, I don't really think this is out of anyone's ball game, but we're going to go with it, and we are going to see how big of a difference we can get from, step one. We have the discipline to reinvest our dividends instead of spending them on dumb crap. And then step two, we have the discipline of contributing, 25% of our principal annually. What difference can that make? Can that make a life-changing difference, guys? Calculate dividends. Okay, this is pretty cool. So the ending balance here is going to be $25,167, putting us at a total return of 333%. Obviously the reason why that return percentage-wise is smaller because we have much more, original capital invested here with all these contributions. Annual return of 7.61% and our annual dividend income breaking $1,000. So, we've kind of gone through a few different cases, and I know we did use that principal of $965. That was just what I was investing today, and I wanted to kind of dig into it and see how, the capital invested today can it change my life? Can this $1,000 starting principal change my life, guys? The answer is yes, guys. We are in this game. It's a long-term game. It takes consistency. It does take, a certain level of discipline not to pull dividends out of your account. It does take discipline to continue to make these contributions and not just get comfortable reinvesting dividends. Guys, we need both. We need net new capital and we need reinvested dividends. And if we continue to build these habits, we are going to see we can get to kind of a pretty life-changing point, guys. I also do want to say I encourage you to kind of, if you're still on the fence about this whole game of dividend growth investing, I do encourage you, take some data from a company you're looking into, try your best to kind of estimate different expected dividend increases and share price appreciation. Be conservative if you have to, and kind of just play around with different investments and how they would look over the long term, guys. Again, my name's Cashflow Cart. Thank you so much for tuning into today's video. Like I said, it's been awesome. I might take one Monday off to brainstorm, but I will be coming back, better than ever, guys. Also, follow my Instagram if you want. It is linked in the description, guys. I will catch you in the next video. Again, hit that subscribe button. Thanks for everything, guys. Let's build wealth.